Graham, I've been wanting to introduce you for a while now, and considering how long you've been sitting here waiting for me, I suppose I owe you the first cup of coffee. So, let me start with something I've heard you say before. People spend an awful lot of time trying to predict what the market is going to do next. Why do you think we're so obsessed with trying to time it?
Because uncertainty makes people uncomfortable, Amy. We like to believe that if we study enough charts, listen to enough experts, and watch enough financial television, eventually the market will politely tell us what it's going to do next. It won't. I've spent a good many years investing, and I've learned that successful investing isn't usually about predicting what happens next. It's about recognizing value, understanding what you're buying, and having the patience to let a good decision become a good investment. Timing the market makes for interesting conversation. Time in the market has made considerably more money, although I admit it's not nearly as exciting on television.
So basically, patience is more profitable than panic, which sounds simple enough, until the market drops 500 points before lunch.
Precisely, although I'd make one small correction. Patience isn't doing nothing. It's having a plan before everyone else starts panicking. If you know why you own something and the fundamentals haven't changed, a bad day in the market is usually just that, a bad day. The trouble begins when people let the headlines make their decisions for them.
But Graham, that's the hard part, isn't it? When every headline is telling you something different, how do you know when you're being patient and when you're just ignoring a warning sign?
By separating the price from the business, Amy. A falling price gets your attention. A changing business deserves your concern. If the company's finances weaken, its competitive advantage disappears, or the reason you invested in the first place is no longer true, that's worth examining. But if nothing fundamental has changed and everyone is simply frightened, well, fear has never been particularly good at mathematics.
Okay, I like that. So if someone watching us today is nervous about the market and maybe they're wondering whether they should sell, buy, or just sit on their hands, what would you tell them?
First, I'd tell them to turn off the television for an afternoon. Then I'd remind them that good investing decisions rarely begin with fear. Look at what you own. Look at why you own it. Look at your time horizon. And make your decision based on those things, not on what frightened everyone else before breakfast. Markets will have bad days, Amy. They'll have bad months. Occasionally, they'll have bad years. But history has been remarkably kind to patient people who own good assets and give them time. Besides, sitting on your hands is considerably cheaper than selling in a panic.
Well, Graham, I have a feeling we're going to have a lot to talk about over these cups of coffee. And something tells me you're going to have an opinion about just about everything.
Opinions are inexpensive, Amy. Good judgment tends to cost a little more. Fortunately, the coffee is still free.
And on that note, I think we'll leave it there. Thanks for joining us for Coffee with Graham Sterling. We'll be back next Tuesday with another cup of coffee and another conversation worth having. Until then, Graham, try not to spend all your time watching the market.